Hey everyone, right, so in this video I'm going to run through some context around what algorithmic automated trading actually is, the pros and cons of it, just to make sure you're fully aware, but also our beliefs around how to succeed in doing automated trading as well. Okay, so the first things first, when you hear the term EA, that means expert advisor, which is just the name for what MetaTrader call algorithms. Okay, so I've just put in brackets the bot. Now I'm going to run through the summary of the pros here, the way that I see it ultimately. So first one, speed and efficiency. Something that's turned on, that's entering, closing, is efficient. It's fast. You can get fast execution of entries, but ultimately stuff's happening without you having to do it. So opening and closing trades whilst you're at work, walking the dog, asleep, and flawlessly. I'll come back to that in a minute. But ultimately, your emotions aren't affecting unless you interfere with it. Like it would a manual strategy where fear and greed might kick in. So I've put here that it removes some of the emotional biases. It's never going to remove them all. That's one of the misconceptions, that people think, hey, there's no emotions now, which isn't true, because money and trading is always going to pull on emotions: fear, greed, doubt, losses. But it does definitely remove many of them, or it removes a lot of the decisions that a manual trader would have to make. When to enter, when to close. Do I trail it? Do I part close it? Is my entry really valid? I've lost the last few trades. Can I hold on to this winning trade? All of those things that we've all been through at times. Now, automated trading allows us to backtest at the press of some buttons and gain substantial data. This is huge. So very different to manually backtesting your discretionary strategy, what most traders don't actually ever do. So they never really know if they had an edge. And if they do backtest, then that's also flawed a little bit too, because what's to say they would have made them decisions at that exact time? Maybe they were coming off a losing run, maybe they were stressed or not looking after themselves, or loads of factors to it. Whereas with this, if you've turned something on, and you've backtested it to X or Y, it's going to do what it was doing flawlessly in that backtesting phase. Doesn't guarantee the future results, but I'll come back to that later. Algos can work when you're not, as I've said earlier. Consistent execution, as I covered earlier. Automated trading is scalable. Okay, so ultimately, for example, if you're trading, as hopefully you're going to be, live capital, prop firms, one master account, as covered in my training, can feed a challenge, a funded account, live capital, but also you could have loads of different master accounts, all trading different ways, all feeding different accounts in different risk profiles too, which you couldn't do without losing your marbles in a in a manual way. Okay, time, you're going to get a load of time back. Now, at first, when you're learning some of our POW stuff, there's obviously an investment at the beginning in your time to learn what we teach. But after that, your trade's opening and closing whilst you're going about your day, or maybe you're juggling a job or doing other things, then that's the no one wants to break free from a 9 to 5 but then spend many hours a day looking at a computer screen. So yeah, time is massive. I believe in data over discretion, and a confirmed edge in backtested data, not just one you think you might have by opening up your MT5 willy-nilly and just entering shit that you think might happen. There's a big difference. So downsides of automated trading: things can go wrong. Your VPS might crash, your terminal might crash. So maintenance here is key, and that might be just checking in a couple of times of the day and checking your VPS is running, the account's running, algo trading's on, blah blah blah. Very easy for traders to fall into this over optimization, which means that you've overfit your backtest to past reality and it's not sustainable and robust in the market moving forward. We cover this in our process. We have various things that we do, mainly the walk forward process, our POW score, etc., that help reduce the risk of this happening. because clearly this is a key problem, and this is why people buy off-the-shelf EAs and fail, because they've overfit the backtest. The A provider doesn't even know about the shit that we talk about, and robust checking your strategies is key. Some of this stuff might be complicated at first, but hey, when we were toddling around, it was difficult to walk at some point, and we've mastered that now. So my approach to this is things are always hard before they're easy. You get to choose your hard. Yeah. This up front might be bit complicated for people to grasp at the very beginning, but ultimately once you do, and everybody in the group and the weekly wins and people's successes, they felt the same as you. Maybe, oh, this is a bit harder than I thought, or okay, what's this again? Reach out for help. There's a load of people around you that do, and you will get it, as long as you just don't quit and give up, and then you're back on the strategy hop trying something else, another shiny new object over there, and you start again. Commitment and results will come through commitment and discipline in execution. Market conditions. If you don't learn to move with the market, your market conditions change. What worked last year won't work now, potentially. So we have to move with a changing market. Okay, I'll come back to that within our beliefs shortly too. Just a bit of fun here, but ultimately as well, any algorithm is doing what you've told it to do. If you're running an aggressive martingale approach and it opens 50 lots and blows your account, you're responsible because that's what you told it to do. Okay. And the EA blew my account. No, you blew your account through the decisions and strategies that you chose to run. That might seem harsh, but this car didn't crash itself. There was a driver there that crashed the car. No one would be saying, hey, the car did this. Ultimately, through what we teach and what we encourage you to do, learning about the strategies it's deploying, knowing what's going to happen with the settings that you've chosen, building diversification, managing your risk, all of those things are key. Risk management, again, is your responsibility to choose how you want to set your risk up, whether if that's per strategy or if that's a global equity protection on your account. The risk management will always be fundamental in how you set up your accounts. And again, there's no right or wrong here, because ultimately how you might choose to do that on a challenge versus your own live capital versus how risky you want to choose to trade. Someone trading $1,000 might be risky and go, I'm not going to have a stop on this. I'm comfortable with, I put $1,000 in, I can afford to lose the $1,000 if it goes wrong. Someone with 100,000 will be like, hey, I only want to make 1 to 2% a month, but I need to cap my downside. I need to keep the lot sizes fixed and small, and I'm happy to risk 0.5% per trade or 0.2 or 0.3 on a single trade strategy. And this is what my trading plan looks like too. In relation to maybe sessions, news, the amount of strategies they're running, all of those things. Okay. So on to our beliefs. Ultimately, our beliefs around algo trading. Diversification is key. Diversification of strategies and instruments. Now, the good news is our tools can trade in numerous different ways across numerous different instruments. So ultimately, our EA's like having 8 trading bots because it can do lots of different things. And this is all covered in the training. Nothing beats data in the live market. You could have the sexiest looking back test, but until you build data in the live market, your confidence won't be as high as it should be. Various Q&As I've shared, I could have 20, 25 master accounts running. I build data in the live market. Then when you get, a challenge or something or another account to start running, you've already got that data that you can start deploying to those accounts. Again, covered in the training. There's no right or wrong at times. A lot of this might be personal preference. A lot of this might be experience. But how much should I risk? Well, that's up to you. It depends on the money, what you're doing with it. How many pairs should I run? Well, that depends how many you want to run. In terms of the size of your portfolio or how much work you want to do in reoptimizing. There's so many different variables. It's like playing poker. You could have pocket aces. Well, how should you play it? Well, it depends. Depends where you are. Are you dealer? Where are you in relation to the other players? How aggressive are the other players? What's your chip stack? How are other players playing? Who's coming after you? there's no one size fits all to some of those questions. A back test is no guarantee of the future, but we can do certain things to increase our probability of success. And we do, and that's what we teach, as long as you follow what we teach. And we do this by walk forward phase, PAL score, and getting run approaches on demo in the live market, gaining understanding of live performance, and then you can deploy that in various different ways. Confidence equals data times time. I talk about this a lot. Okay, fundamental. Markets change, staying in line with market conditions. We believe that we have to re-optimize. Some people might do that weekly if they're looking at a short-term optimization. Some might do it every 3 months. Some might do it every 6 months. Now, if you're back testing a year and you're using a walk forward phase of a quarter, then that might be a 10-month back test and a 2-month walk forward phase. So every 2 months you would look to re-optimize your set files as such as a worst case scenario. So thinking that that set file that you've just back tested is going to work forever is flawed, but also is looking at it and going, oh, how did this perform 5 years ago? A lot changes in 5 years. What happened in the last 5 to 10 years bears no resemblance to the market today. Look at GU. Is how that pair moved in Brexit important to today's movement or how it's moving or the volatility? No. Same with COVID and gold and all of those things. Now, those things might happen again in the future, but this process will catch that changing volatility and movement if you stick to the process of re-optimization and moving with the market. And also, the longer you back test, the safer it might be, but there are more compromises in that approach. So that means you're going to be making less for the same sort of amount of risk because you're covering more market conditions, how big a trend was, when it's ranging, etc. So if you do a back test over a year, that year's performance is going to be more compromised and going to make you less profit than maybe a 3-month test. But the 3-month is less certain than the 12 months. So again, right or wrong, if you're looking for an aggressive approach or looking to pass challenges, the 3 to 6 months will be more suitable. But if you can get more data and you're looking to trade a substantial amount of live capital, then you might look to do a slightly longer optimization. Walk forward is a must. Now, walk forward is like a pre-live phase, covered in the training, but what most people do is they optimize and then run live. And this is where their strategy falls off a cliff and, hits bigger drawdown and loses. Optimization, walk forward is where we optimize on a period of time. We have the walk forward phase that's still in the past, but it's not optimized in this time period. It's a new time period that is validating or checking, hey, what worked here, does it continue to work? That's why I like to call it like a pre-live check. It's still in the past, but it's a different time period. This is more likely to work in the live market versus this top one, okay? Be forever a student. A growth mindset is a must. We're always learning new things, having new realizations from data in the live market or things happening, and we might get some new ideas. That's okay. We never fully complete success in trading. We're always looking to improve. And this is key here, right? It's not just about plugging a bot in and living happily ever after. Decision making and critical thinking is a must. You've got to approach the mindset training. You've got to learn that stuff. You've got to be aware of the decisions you're making, cognitive biases that can floor us too. Okay? Know what your strategy is doing. If something happens and you're like, oh, I didn't know that was going to happen, then you've failed because you've not learned the inputs, you've not understood your set files that you're running, and you've got to know what's going to happen before it happens in terms of your trading strategy, right? Because otherwise you're in a constant place of uncertainty and lacking confidence, and that's not a key ingredient for success either. And last one, all strategies must be in line with how you want to trade. If someone's stressed at a one lot opening on 100 grand account, then don't run one lot, run a much lower lot size that you're comfortable with. If someone hates trading over the news windows, then have your news filter on. If someone hates fighting the market, then just trend strategies. If someone, I don't know, those sorts of things, our strategies, you're unable to make those decisions and choices within your optimizations to make sure you're not running shit that stresses you out. Yeah, because if you're stressed when you're trading, you're going to make flawed, emotional, irrational decisions which aren't going to serve you too. So yeah, that's literally it. Quick run through of pros and cons of automated trading, what it is, how it can help you, the drawbacks, our beliefs around how we do it, and what served us in terms of the results we've helped people get, and we help them get week in, week out. You're the driver, very important. Make sure you drive safe. And walk forward phase. So hope that helps, gives you a bit of context and into your journey with us at PAL.